Sri, the COVID-19 pandemic has had a devastating impact on US business investment. What's the latest data telling you about how bad things could get?
Yeah, it's not looking very good right now. In 2019, we saw the US-China trade war really impact the business investment. And then moving into 2020 and the first quarter, COVID-19 really came onto the scene, and that had a pretty big impact on business investment, bringing it down further. It declined by 2% for the quarter. Now, moving into the second quarter, we saw these mandated shutdowns of non-essential businesses. All of that really again weighing on business activity. And although we've seen gradual relaxation of some of these measures, it still seems like business investment will take a further step down in the second quarter. We're expecting business investment to come in 10% lower than what it was at the end of 2019.
That's pretty significant. I know in your report, you also expect US investment to rebound in the latter half of the year. Where do you see that pickup coming from?
Yeah, we predominantly see it in two categories of investment. That's intellectual property products as well as equipment investment. So intellectual property products are these technology and software products. So as many firms are moving towards a working from home sort of environment and adapting to social distancing guidelines, we expect more investment in these products. And in terms of equipment investment, there are going to be businesses that are consumer facing as well as manufacturing firms that have to fall in line with social distancing guidelines. And so they'll have to bring in equipment, and that will increase investment on this front. Where we see things a little weaker, though, is in terms of structures investment. And that's predominantly because of oil, and the oil sector has been hit pretty hard due to the decline in the oil prices, and oil prices are pretty low at the moment. And then to remind you, earlier this year, they moved into negative territory. So that had a really big negative impact on oil firms. And so that's going to weigh on structures investment, specifically that of oil rigs. So on the whole, we're expecting investment to gradually improve, but that, again, to come from intellectual property products as well as equipment.
Okay, now I want to switch gears a little bit. We've been talking about sort of investment on your investment on the business side, but I want to look at consumer spending. And certainly US consumer spending on goods and services has taken a bit of a hit, a big hit actually, because of the pandemic. Can consumer demand recover enough to help out US business investment?
Well, the consumer is still going to be very important for US businesses. Businesses look towards the consumer in terms of their investment decisions, many of which are very expensive. So with a recovery in consumer spending, will likely start investing again. However, that relationship between the consumer and businesses might weaken as we come out of this pandemic period, because we're still faced with a lot of uncertainty at the moment. Whether there'll be a vaccine, whether we'll see a second wave of the virus. So as a result of this, we believe that businesses will look towards more robust consumption. So even though you might get a rebound, as we did recently in retail sales data, we'll probably need to see a continued increase in spending for businesses to feel confident enough to put forward these investment projects because, again, they are pretty expensive.
Certainly, consumer spending is key to that. What are some of the other factors that might drive US business investment spending going forward?
That's a very good question. One of the near-term factors is going to be the effectiveness of special lending programs brought forward by the government as well as the Federal Reserve. So specifically, the Paycheck Protection Program. That's meant to keep businesses afloat during this pandemic period, so that once we get past this, they can start investing again and ramping up operations quickly again. However, the program itself is only meant for about 2 months of payrolls. So once it expires, you really need to see the economy recover quickly enough for businesses to then latch on and start investing. So what we might see is an extension of a program, or a similar sort of program as Congress seeks to further support the economy as well as small businesses. Now, over the longer term, there are more fundamental factors at play. So you have the competitive environment. Competition means that there will be more investment, but we might not see as much competition, especially if some businesses start defaulting, meaning less businesses are competing in the post-pandemic world. And then we also have financial conditions. Where are rates going to be? Can businesses tap into lower funding prices? So that we have seen the Federal Reserve state that it will keep rates low through 2022. So that should help. And lastly, the big factor is uncertainty again. Where is the pandemic kind of heading, or where is this virus kind of heading? Will we see a vaccine, or will we see a resurgence of the virus? And if that's the case, then businesses will hold back on investing.
And if we could finish there, I want to kind of get your long-term outlook of where you see U.S. investment spending.
In terms of the longer term, as I had said, we do expect businesses to resume investing, but it will be more gradual. But we expect some economic scarring to take place in terms of investment. So by 2026, we expect business investment to be about 5% lower than what it could have been without COVID-19. But saying all of that, there are definitely there's uncertainty around these estimates. On the upside, if there is a vaccine, we might start to see stronger investment taking us, maybe even higher. And on the downside, as I had mentioned, if there is another knock on consumer and business confidence because the virus again resurges or mutates, that could bring investment lower. So hopefully the latter is not the case, and we see businesses invest closer to what they would have done in a pre-COVID environment.
Shri, thank you very much for your insights.
No problem. Thank you, Anthony.